Welcome to the Ironworth Trading Show. This is not financial advice. This is for educational and entertainment purposes only. How y'all doing tonight? How did y'all trading week go? Did y'all have a good week this week in the market? Did you get to trade? If you didn't get to trade, why didn't you? If you were able to trade, what did you trade? If you would like to be able to trade, let me see a W in the chat. If you want to know how to trade, put a W in the chat. If you already traded this week, I would like to know what you traded. And if you didn't get a chance to, go ahead and tell me why you didn't. I'll wait. Y'all want me to ask y'all again? If you did not trade this week, I would like to know why not. If you did trade, I would like to know what did you trade. If you would like to know how, I would like you to put a W in the chat because you about to win tonight. You're going to win tonight. So check this out, y'all. I don't know how y'all journey coming along in this whole trading. I don't know if you trade in futures. Someone says, I use Robinhood, but it's been cooking me. We here to change that, West Coast. We here to change that, okay? Now, I know what I got posted up here is self-explanatory, and it's easier said than done, but guess what? That's not true. That's not true. It's actually easier to do this shit than it is to say it. You can control every trade you get in to where it ends in one or four ways. Not one or four, one of four. It's only going to be one of four of these. It's not going to be all four. Now listen, the big win. Let's talk about the big win. You can only see the big win if you know what it takes to hold. Sometimes you need to have diamond hands. Y'all know what diamond hands is, right? Let me take a moment and share the live out so that a lot of people don't get upset at me for going live without them knowing. Let me share the live out. While I'm yapping, I need y'all tapping. 1 second. Let me share the live out. You guys do me a favor. You guys can share the live out as well. Let me share it out to my peoples. I think that's about it. That's enough. All right. Thank you, guys. I appreciate you. Everyone that followed instructions and liked the screen. Thank you. I appreciate you for tapping the screen. If you guys are new here, hit the follow button so you don't miss another live stream. Okay. I don't slowing down the rate at which I do the free live streams. It'll be sub only one day here in the future, you guys. So take advantage of every moment that I come on here and share this information with y'all. Okay. Here at Ironworth Trading, where iron sharpens iron. Okay. I got you. Now, we was talking about the big win. When you have a big win, because you will get one. You will get more than one. And my mama used to say every dog has his day and a good dog has two. Okay, so we're not happy that we can do it. We're happy that we can do it again. So I'd like to talk about how anytime you enter a trade, it should be one or four of these. One of four of these. A big win cannot happen if every time you up, you closing it because you're scared you're going to lose. So a big win happens when you maximize your gains. How do you maximize your gains? First of all, if you're trading stock options, I'm going to need y'all to stop buying one contract. One contract equals 100 shares when you are trading stock options. Okay, cool. One contract is 100 shares. That is the bare minimum. It's fine to start out trading with 100 shares. One contract when you first start trading stock options. That's cool. But you need to understand and overstand that you can only take profit one time. Okay. Soon as you sell that contract, you don't have another one to leave it in there. You basically don't have another horse in the race. But if you get more than one contract, you can take profit at a certain level and leave the rest of them. You can they call it runners. Okay. You can leave a runner. You can sell, let's say you get 3 contracts whenever you trade in stock options. So let me break this down to y'all real quick without turning this into a crash course. When you are trading, whenever you hear people and they are day traders or swing traders and they trading in the stock market, whenever you hear them say something about a call or a put, they are saying that the price is going, whenever they say it's a call, whenever they're ready to buy a call, right? If you buy a call, you think the price is going up. If you buy a put, you think the price is going down. Hey, Divine One, how you doing? Hey, everybody, how y'all doing tonight? Thank you for stopping through. Please hit the follow button, you guys. Please hit the follow button. If you are new here, I would like to see you here again. And also, while I'm yapping, y'all already know what's up. I need y'all tapping. Let's get the live out to about 10,000 likes, and that'll push me out to a larger audience. All right, we're going to get a little busy tonight. I got a few things to show you guys, but I want to start with this message because a big loss should not be a possible option. Okay, and amateurs, they like to think about how much money can I make? How much money can I make? How do I make money? How do I make money? That's not what you want to think about when you come into the market. Okay, you want to think about what is the proper way to lose? How do you lose without losing it all? Because you're going to lose. This is a game of probability, not predictability. All right, so someone just asked me a valid question. What's considered a small loss on a $50,000 evaluation? Well, this is not financial advice, but a small loss on a 50K account would be something like $50. Okay, $50 would be, but you can get even smaller than that. You don't have to use a risk to reward ratio like that. It also depends on how much you're leveraging on the trade. But that's not my point. My point is, if you do what B. Lee is saying in the comment section, which is use risk management, you will have nothing to worry about. What is risk management? Let's talk about it. Let's talk about risk management for a second. Okay. Let's talk about risk management. Now, I always use this example. All right. Let's say you got $1,000 and you go to the casino and you got $1,000, right? Since y'all like to gamble and shit. And I know a lot of y'all don't like to gamble, but we're not gamblers. We don't like gambling. All right. So let's say you go to the casino and you have $1,000. Somebody just asked the question, if you had $1,000 account, how much would you risk per trade? It's a good question. If you went to the casino and you only had $1,000, are you going to take $1,000 and put it all in on one trade? That's not proper risk management, because if you lose that, you will lose it all in one trade. Okay, that's not good risk management. Also, if you go in there and you got $1,000 and you taking $100 per trade, let's say you lose, $100 per gamble. Let's say you lose every one. It only takes 10 times before you lost it all. So if I had a 1K and I went to the casino, I'm only doing $10 at a time. Now, even if I'm doing $10 at a time, your stop loss will be $1 out of that $10 that I'm risking. So if I'm risking $10, I still can set a stop loss to where if I lose $1 out of that 10, I can get out the trade and walk away with that $9 to trade again another day, or to enter into another gamble or a slot machine, or whatever floats your boat, right? You may be a sports bettor. Some people sports bet, some people go to the casino, and then you guys bring that same energy over into the crypto world or into the stock market or into the futures market, and it don't quite hit the same. I know somebody that lost 80K, okay? 80K from January to now trading stock options, but they couldn't tell you what the fuck a candlestick is. And I just can't have that. I figured I'd do more missionary work, right, when it comes to this, and let you guys know, because I don't like the fact that a lot of you guys are trading but don't know the basics, the bare minimum when it comes to investing. B. Lee says you should stay within a 1 to 5% risk. B. Lee, you are not a beginner, B. Lee. Let me find out you another sandbagger. I got a good friend. She a sandbagger too. Y'all sandbaggers. Y'all already know this shit. And y'all be acting like y'all don't know. No, you ain't never act like you don't know, but you do sound like a professional in here, B. Lee. I might need your help one day, helping me teach a class. You and Goddess, since y'all know. How do you trade options? When do you know when to enter a trade? Okay, so we will get to that. I will get to that. But you know West Coast by using previous levels of support and resistance. You want to pay attention to volume. You want to pay attention to open interest. It's a lot of things that you pay attention to. B. Lee says, LOL, I'm still learning. It's always the ones that say I'm still learning that be knowing. Talking about you just got here, Goddess. All right, well, I'm glad you got here. I'm glad you made it in. Do you got your tardy slip? Late to class. You are late to class. All right, so look, the second thing before I go on with the show, I was talking about the big win and how whenever you trading, you're gonna get a big win. That's gonna happen. But the way that you maximize that is by making sure that you have more than one contract or more than one share. Right? Open just went crazy. I know somebody that really bought one share. That's right. It's not too late to catch the shade. That's right. It's a weeping willow. All right. So look, one share is what is that gonna get you? You feel me? What is 5 shares gonna get you? Now it's better than nothing. Don't get it wrong, but at least you're gonna have a small win. But that's still better than a big loss because the bigger the risk, the bigger the reward, right? But even when you think of it that way and you think, well, if the bigger the risk, the bigger the reward, but that also means I could lose more. Not necessarily if you utilize a stop loss in the correct manner. If you say, I am only willing to risk this much, and this is where I want to get out of the trade at, every single trade you take, you won't have a bad day. You won't have a bad week. You won't have a bad month. You won't have a bad year. You won't have a bad time. You hear me? Do y'all hear me? Let me get a W in the chat if y'all understand that much. W is my favorite letter in the alphabet. We are winners. Winner, veggie dinners. Let me get a W in the chat if y'all understand that much. The stop loss going to be your best friend. Without that, you could something that could have been a $40 loss for the day could end up being $400. What could have been a $10 loss could end up being a $100 loss or $1,000 loss. However, whatever the hell you was risking on that trade, you will lose it if you don't use a stop loss. They see you and all the other traders out there trading without a stop loss, and they test your ass. They test you. They test you. All right. They're going to pull that price down just enough for you to get shaken out. And then it's going to go right where you expected it to go. How many times have y'all done that or seen that happen before? The price came down, got you, you was losing too much money, so you press sell only for the price to go exactly where you wanted it to go and beyond. How many times that happened to y'all? Put an L in the chat if that happened to y'all. If that ever happened to you before, let me see L. Don't be scared. Don't be scared. Don't be ashamed. Tell the truth and shame the devil, because I know I ain't the only one. Right? So in order to prevent this from happening, right, to prevent this from happening to you, from you getting in the trade and then immediately it's going to stop you out, right? You get stopped out. That's fine. I would rather get stopped out than for me to lose that money and I'm not able to get in the trade after that because I took away too much of my buying power. See what I'm saying? And then you wrapping up all your buying power into one whole day. Like, let's say you only got $1,000 and you only trading with 1K. Well, you shouldn't utilize all of that buying power in one trading day. You're risking too much. This is not good risk management. I think a lot of beginners don't have that. No matter what you learn, if you don't have some sort of mastering risk management when it comes to trading, you're going to be fucked up. This is going to preserve your trading capital. This is why risk management matters. It's going to preserve your trading capital. What's trading capital? That's how much money you got to take a trade. You ain't got no money to take a trade. You're going to be, you can't stay in the game for a long time. You in and out this motherfucker. You ain't even got enough to take a trade Monday when it comes. Monday morning comes, you ain't got enough to capitalize on the moves. Number 2, you set a clear stop loss. You want to make sure you understand and understand the maximum loss that you can tolerate, that you can stomach. I mean that. By stomach, I really do mean that. You got to ask yourself, how much am I willing to lose on this shit? All right, I'm willing to lose this. And it really should be money that you don't care about. If you trading with money that you care about, you're going to lose it. You got to not give a fuck about it. I'm serious. You got to be prepared to lose it. Not lose it all, but you should have a set amount that you are prepared to lose. Now, even out of that amount, you're not trying to take 100% loss on that. You have, you basically saying, look, the price could come down to here, right? But if it gets down to here, I want to get out. Let's say you think the price is going down. You can say, okay, I think the price going to go down, but if it comes up to here, get me out the trade. I don't want to lose. I don't want to lose that much money. Okay. You got to have that set in your mind before you even enter the trade. This is all premeditated before you enter the trade. Y'all, don't do me a favor. Don't get in the trade and then start thinking about the shit. Do not get in the trade and then start thinking about it. All right. Position sizing. This one contract shit is this one share shit is not gonna make you no money for real. But you should determine the size of each trade based on the risks. Based on the risk. That's what it's based on, right? If it's a low probability trade, then I'm not really going to put too many. I don't want a lot of contracts. It's a low chances of this shit happen. I think it's gonna happen, but I'm not really sure. That's low probability. High probability is there's everything pointing at this happening. News, indicators, candlesticks, everything is pointing that this shit is finna go up. That's a high probability trade. So I will risk more on that. That determines my position size. And diversifying your portfolio. Spread the risk across different stocks. Don't just put all. When you buy a stock, it should not say 90% of your portfolio is wrapped up in that stock. 80%, 50, 60%. That's going to, that means if that stock do bad, your portfolio does bad. All right. So now you want to aim for a favorable risk to reward ratio. You want to make sure that you are risking $1 to make $3. Okay. And the orders that you're using to set these stop losses are limit orders, like a stop limit order. You might be able to use a trailing stop loss depending on what you're trading. But nonetheless, if you do everything I just told you, you're going to have a big win or a small win, right? Or you're going to break even, which means you didn't lose money or you didn't make money, which is not as bad as number 4. Number 4 is a small loss, but it's not as bad as a big loss. A small loss is the least favorable thing on this list, but it's also okay. You can take a small loss and still be all right. All right. That makes sense. I just wanted to start it out with that before, we went on with the rest of it. I had to start it out with that. Now, a lot of y'all still don't know how to read a stock chart for real. So we're going to talk about candlesticks for a second. I'm going to talk about candlesticks. Let me see. How do you protect against price slippage on a stop loss? You really wouldn't have to worry about price slippage on a stop loss because what's going to happen is you can do a market stop. Okay. And really you do it by making sure that you get it for, how you say bid or sell. And then so a person is trying to buy it for the lowest price that they can get it for. And the sellers are trying to sell it for the highest price that they can sell it for. So a market order is just going to it's going to make you deal with slippage. But a limit order is you saying at this limit, get me out the trade, and you get to pick how much you want for it. But if you make sure that you sell it for the right price and stop trying. Some people get greedy on that part and they order never get filled. So that is a good question. Just make it the same price as the stop loss price. Like your, not stop loss, but your stop limit order is going to ask you for 2 different prices, the stop price and the stop limit price. You want them, make them the same price. Don't even get caught up on trying to bargain and shit. All right. Don't get caught up on trying to bargain. Go ahead and do a stop limit order and it'll help you out. All right. All right, here we go. Let's talk about the stock. Let's look at this picture real quick. Green candlesticks mean that the price went up. Y'all understand that? Let's take it slow. But if there aren't enough sellers, it won't fill. Yeah, if there isn't enough liquidity in the market, it will not get filled. If there's no, if there's low volume or low open interest, your shit won't get filled. So pay attention to that as well. You want to make sure that there's a lot of volume. You know, if there's I like trading stuff that got a lot of volatility too. But yeah, like I was saying, green candlesticks means the price went up. Red candlesticks means the price went down. So you read green candlesticks from the bottom up. Somebody says the live is trading down. Rotating candles wild. So if you don't trade candlesticks, Imunez, what do you trade? All right, so look, is the live cutting off? Can y'all hear me? He said the live is cutting off. Can y'all hear me? I need to make sure you guys can hear me. Green candlesticks are showing you that the price went up from a certain point. Red candlesticks are showing you that the price went down from a certain point. And you know this because the green candlesticks close at the top, the red candlesticks close at the bottom. So the price went up from here and down from here. The wicks, the skinny parts of the candles, only tell you the highs and the lows. So even though this candlestick is showing you that the price went up, it's still showing you that the price went all the way up to here and then it came down and stopped right here. It's showing you that the price went down all the way here and it came up to here. So you got to know that the lows is showing you that the lowest it went down to. And then when it crossed back above open, it went all the way up to here and it closed here. That's the story of that green candlestick, the story of the red candlestick. They're telling you a story. Price opened here, went all the way down, came all the way up, probably came all the way back down here and closed. You know this because it says open and close. So we know where the price opened at. We know where it closed at. We know it went down to this point and it went up to here before it closed. It did the high and the lows after it opened. So here's an example. Here's the green candlestick. All right. So this is a 1 day candle. Each candlestick is going to represent 1 day, which means we're on a 1 day chart. All right. So the buyers take control, so we know it's a green candlestick. The stock market opens at $150 at 9. Let's say it's 9:30, and the stock market just opened. And now this price is at, let's say this is Apple, right? Boom, it's at 150. Now, at 1 hour later, the price went down to $145. That created the wick on this candlestick because the price went down. It really turned into a red candlestick up until it passed back above it. So 1 hour later, the price went down from 150 to 145. Then it shot all the way up 4 hours later to 170. And then when the stock market closed, it came back down to 165. That created this candlestick. I'm going to show y'all what this looks like on a real chart in a second. So now the red candlestick, the price opened at 170. OK, and that's 1 hour later, the price went up to 175. OK, then the go all the way down. 4 hours later, the stock went all the way down to 150 and it came back up to 155. And that's where the stock market closed at that day. And they created this red candlestick. So I'm going to pull up a chart real quick just to show you an example on a real chart what this would look like. OK, let's see, stretch these out real quick. This is a Webull desktop version before any of y'all ask. This is Webull. Now, this is a 5-minute chart. OK, you see it says 5 minutes. And now, so each candlestick represents 5 minutes of time. You understand? Each candlestick represents 5 minutes of time. And I'll show you what I mean. All right, here, look, here's a good example. Okay, so if you look at the time, it says 9:30. This is September the 12th at 9:20 a.m. Okay, and if I go to the very next candlestick right here, so this is 9:20. This candlestick is 9:25. If I go to this candlestick, it'll say 9:30. Boom. Each candlestick represents 5 minutes of time. I know that the price of, what's this? Open, right? We know that at 9:30, opened up at $10 a share, because the red candlesticks open at the top and they close at the bottom. So I see a red candlestick, I immediately know that the price started up here. And so if you really want to just pinpoint it, I would go over here and get like a horizontal line, right? This is the toolbox. This is Webull desktop version. And you would click on the pencil right here, the drawings, and then go to the horizontal line. And this will allow you to mark areas on the chart that you want to see what the price is at. Like you might want to mark resistance or support. You would use a horizontal line to do that. In this case, I want to see the price of this candlestick right here mapped all the way out with this red line. So now I got this red line showing me the top of this candlestick. That way I don't have to try to guess what price it was at. Boom, $10. So it opened at $10 and it went down. It didn't go up, it went down. All right, so when I zoom in on this candlestick, I'm gonna stretch it out just to give you guys a better look. The price opened at $10 and went all the way down to the bottom of the wick. It went all the way down to the bottom of this wick, and that price is $9.66. So the price went down to $9.66, and then it came up to here and it closed. So it closed at $9.79. Then 5 minutes later at 9:35, this candlestick opened at the top, closed at the bottom, but it's still showing you how low it went before it came back up and closed. The next candlestick opened right here at $9.70. Okay. It went down a little bit. That created that bottom wick just to show you how much it went down. It went down a little bit after it opened. Then it shot all the way up and went up a little bit and came down a little bit more before it closed. It's really easy to read these candlesticks. They're only telling you what the price was at when it opened during that time and what the price was at when it closed during that time. Each candlestick represents a certain amount of time, depending on what time frame you're on. Okay? Do y'all got that? Let me get a W in the chat if you understand. If you don't understand, let me know. If you don't understand, let me know. It's okay if you don't understand. You're not bad if you don't understand. Yes, I do, Kai. One second. So no, I really do understand. Yeah, so no, for real though. All jokes aside, hold on. So look, let me show you something. Let me show y'all something. Hold on. So look. Matter of fact, we need to talk about the size of the candlesticks. So let me show you something real quick. Oh yeah, here we go. Here we go. Buyer's power. Win or lose momentum. Let's talk about it for a second. If you guys are new here, go ahead and hit the follow button. If you're new here, hit the follow button. What is the right time to enter as sell or buy? You want to pay attention to support and resistance. You want to pay attention to support and resistance. You want to buy red and sell green, like my man Chad said. Great answer, Chad. So check it out. If I don't see you guys, if I don't see your question, one of my moderators are valid. They will answer the question. So buyer power. Buyers are in control when you see a healthy ass green candlestick. Buyers are in control when you see a green candlestick. What did Trucker Dude say that was so funny? Laughing my ass off. Go back right quick. All right, hold on. All Are you telling me to go back to this? Is this what you wanted me to go back to? What about ASST? It's been swinging so hard lately. No, the titties. Where you see, hold on, where y'all see some titties at? Y'all better calm down now. Don't do that on the live. Y'all gonna get me in trouble. Naked lady in the background. Where? Oh, no, you know what? I ain't even finna trip. Y'all don't get me started. I don't know where y'all seen it at, but I'm gonna act like I ain't see it because I didn't. It was an ad. Oh, okay. Okay, see, get your mind out the gutter. I'm a Scorpio. Y'all gonna make it worse. So look, the green candlesticks, when you see that, yo, do you mind mentoring? Hit the link in the bio or inbox me. Get up with me after the live. I'm not getting in trouble. TikTok, I'm not promoting my brand. TikTok, this is for educational purposes only. Inbox me though. If you are a serious inquiry, go ahead and inbox me. Hit the follow button. I hope you already hit the follow button while you asking me that question, right? Please hit the follow button. And while I'm yapping, I need y'all tapping. Let me get the live up to 10,000 likes. Please and thank you. I got you, Culture Clips. I got you. See how you act? See, I knew it. That's why I said it. All right, so look, big green candlestick. Buyers are in control. When the buyers are still strong when you see it like this, because there ain't no bottom wick. That just tells me that the price opened and went straight up. Now, it did come down a little bit and close, but I know that it didn't go down after it opened. The candlesticks tell you a story. Sellers show up. They showed down, but the sellers showed down, but buyers are still in control. So as soon as it opened, the sellers kind of popped up a little bit, but then we came back up. The buyers are still in control. Y'all understand so far? Y'all with me? Because you remember that the candlestick's only telling you where the price opened and closed at. So obviously, the longer the candlestick, the bigger the move it made, right? That's obvious. Okay, so sellers are stronger than the buyers. Sellers stronger than buyers, but buyers are still in control right here because they push the price down here. They push the price down there as well. That's what's creating the wicks. The price went all the way up to here, but it came back down. The price went down to here, but it came back up, but it still went down. Still went down 2 times within that time frame. And the wicks are going to tell you that. I trade futures, I trade stock options, and I buy and sell crypto as well, but more of a buy and hold situation when it comes to cryptocurrencies. Unless you're dealing with meme stocks, you are not to hold a meme stock. You are not to hold a meme stock long term. Those are shit coins. There's some short term money to be made there. You make a shit ton of money off the shit coins, but it's short term. All right, so now we got sellers are more strong, right? Buyers are so weak. When you see this, then you know that it's probably about to be a reversal because the sellers are stepping in and the buyers are not so strong anymore. The next few candlesticks could or should be red. Chad, what do you think about it so far? You got anything you want to add on to that? Do you leverage? No, I use my own cash. That trucker dude. I might leverage if I'm trading futures. And this is not financial advice. Did you do 5? Maybe not. Sellers are active, but buyers are a little more stronger. But you can pretty much tell just by paying attention to the wicks. If the wick is very long and the body of the candlestick is just getting shorter and shorter, you're losing momentum. And it's a good indication that it's about to be a reversal. King, you're my king now. Okay, Creamy. You can get up now. You know what I'm saying? I hereby declare you my you a part of the Knights of the Round Table or some shit. I don't know. You're gonna lose your money trading like that. Like what? Trading like what? You need to understand strength of candlesticks and what it means. I'll show you not in real time, but I'll show you real quick what I mean on the chart. You can see it clear as day. Let's just look at every time the price reversed what the candlestick looked like. Let's take a look at this one. So as you can see, the price came down. Look at the candle. Look at the body of the candlesticks, please. Look at the body of the candlesticks. Notice that right here at the reversal, what kind of candlestick you got. And what did I just tell you about this candlestick and what happens when you see a candlestick like that and you see the long wick with the short body? Look what happened afterwards. Also, look here. Look what happened at this candlestick. You see how it came down after the body of the candlestick got like smaller? I mean, shit, you can literally see the momentum in the body of the candle. It's really not rocket science. Don't listen to people that make this shit harder than what it got to be. I think that's the problem. What chart you want me to show again, Lily? Not until you follow me back, Lily. I'm just playing. I got you. You talking about this? Yeah, so I just showed y'all an inverted hammer. I showed you a hanging man. Yeah, I showed you a dragonfly doji. Okay, so whenever these are literally old as hell. Some rice farmer in fucking Asia came up with this candlestick system. Don't quote me. Do your own research. How long you had to look to find a chart, for example. It's not long at all. I just went right here to Webull, boom, and pulled up a chart. Pulled up a chart. It was not hard at all. Didn't take long at all. All right, so you see how I wanted to show y'all something, and you see. All right. So you're looking at price manipulation. You're looking at price manipulation. All right. Notice the price was up here and it came down here. The price was up here. It consolidated for a minute and it came down here. I got the price manipulation spots marked with the red box to show you where the price was being manipulated at before it did the wrap and run. Manipulation, wrap and run, consolidation, manipulation, wrap and run, consolidation, manipulation. So when the price is being manipulated, you gotta pay attention to the pattern. A lot of times I say when it shoot up like this and everybody start buying in because they see the price went up, then it starts doing this and they freak out. Then it do this and they sell only for the price to go higher than where they got in at. Can I get an amen? Huh? And then the price will do it again. And okay, so literally the price open did this in a matter of 2 to 3 days. Open did this in a matter of 2 to 3 days. And I mean, some of y'all paid attention to the pattern. And even for those that didn't pay attention to the pattern, we handed it to you on a silver platter. On a silver platter. Yes, and good question about the EMAs. Good question about the EMAs. Somebody else asked me about the EMAs today as well. It's the exponential moving average. What time frame is it best to see that in? Yeah, you can see it in any time frame. IPO stock today. Klarna IPO today. I think you have any opinions on Gemini Space Station IPO stock from today? I just know that it's crypto related, and I keep all of those stocks that are crypto related in a folder. I'll do my research on it, but I know that whenever crypto move, they all do the same. They all move with Bitcoin. I don't see them doing good if crypto is in a bear market. So I use them for puts on shit like that. But I think it'll be a good company to invest in, but you want to give it a few months to see, let it get some areas of resistance settled in so we can know how high it can go before we don't know how high it can go. We don't know how low it can go. We want to get a range figured out on it first, if that makes any sense. When a stock first come out, I want to get some price action. Can you send me a request? I don't have a request from you. Okay, I got you, Lily. I got you. All right, so EMAs. You go to your indicators, and then they'll all pop up over here. But if you don't see it, you just go to all indicators, and then you can add whatever indicator that you want to add on the chart from here. And you can just click this button to add the indicator to your chart. Click the star to add the indicator to your favorites for quick access. Done. And I want to add the EMA to my chart. And so now it's added. you'll be able to see. But I want 3 of them. I want 3 EMAs. I want to see the 200 moving average as well. Okay. I want to see the 200 moving average. Right now it's showing me the 5, the 16, and the 12. Let's see if we can change that. I want to see the I want to see the 9, and I want to see the 20. You guys can do this. You can make it however you want to make it, okay? You don't have to use the same lengths that I'm using. And this is tracking the 9 previous days, the 20 previous days, or I'll use the 9, the 50, and the 200. What you think, Chad? What do you like to use? Depends on the strategy you're going to trade. That's right. So now, I know that literally the 9 EMA is going to be one of the lines that you choose. You can change what color you want it to. You can change the color of it as well. I'll go right here to style, and you can change the 9. It's going to be purple. The 50 is going to be peach. You can change the width of the line. And so what it does is it smooths out the price. It's just showing you the average price that stock has been over a certain period of days. That's all. That's all it's doing. It's flattening out the price. So we know this is the 200 EMA, this is the 50 EMA, and this is the 9 EMA. I'll actually take the regular moving average off so it don't confuse y'all. There we go. Now you only see 3 extra lines. Those are your moving averages, exponential moving averages. So Chad, like the 10, the 21, the 50, and the 200. Okay. It does depend on what strategies you are using. Let's read some of these comments. Do you use certain methods? Did you see my comment? What are your indicators? You have any opinion on Gemini? I read that one. Open door went crazy. How do you know when to enter? Okay, so people like to use these indicators as areas of support too. They use them to help them find where to get in and out of a trade too, as well, on the short term and on a long term as well. Twin, you like the green and red indicators? What do you mean? Be more specific. Let me see. Be more specific. I like this site. I think you put me on them, Chad. It's so helpful. It helped me get some shit figured out without me having to make it myself. Let's see, what do we got? All right, here we go. So here goes some uses of some of EMAs. Oh, I love the TTM squeeze. TTM stands for trailing 12 month. I can't say it, Gypsy, because TikTok go to thinking that I'm trying to get y'all off TikTok, and I'm not. So just know you can go and see a bunch of pictures related to whatever you're looking for right here, you know, without me saying too much. But yeah, so look, we got the 5, the 8, and the 13. Okay, you see resistance area here because the price kept coming up to this level and it would stop. It came up to this level and it would stop, and it would stop again. They got the EMAs color coded so you can see. Sometimes these EMAs will cross over the other one, and that will give you a signal to buy or sell. Okay. I'm giving you what somebody just told me is called a nugget. I'm giving you the nuggets. It's just up to you. I can lead you to the door, but you got to open the door yourself. You feel me? Unless you join the community and become one of my own, then it's another story from there. Other than there, I'm giving you the nuggets. You just got to do the rest on your own. We also was looking at, we talked about TTM squeeze just now. Chad just brought that up inside the comment section. So how to read the TTM squeeze. Red dots, stock is in a squeeze, consolidating before its next move. You asked me about this, goddess. This is another one. Green dots, stock is not in a squeeze. If green dots immediately follow the red, the squeeze is firing right? The momentum is on the sell side. If you on the squeeze histogram, if you see a red dot, yellow dot means momentum is on the sell side. This is what the indicator would look like. Chad answered the question. What was the question? What is an EMA? Yes, I did. Yeah, exponential moving average. That's right. You guys know what an average is. Do you guys know how to find the average, the average of a group of numbers? Yes. See, look. It's gaining bullish momentum, excuse me. It's gaining bullish momentum, dark blue lines, falling bullish momentum. You would have to see this on a chart work in real time for you to know how it works. Right now, this is advanced, though. This is like, right now, y'all need to be focused on simple shit. Not those, you know, it's like trying to teach a classroom full of people, and some of them are high school students, and some of them are middle school students, but then some of them are elementary students, and I'm in here trying to tell everybody the same information. And yeah, I really wanted to start from a crash course from the very beginning, which is why I said for beginner traders only, because I don't want to get carried away and confuse you guys. RSI is Relative Strength Index. And we'll do indicators on an entirely different live. I'll dedicate a live specifically towards indicators, and I can talk about indicators with specificity. That's right. Some of y'all in preschool too, all about payment processing. All right. So when y'all looking at a chart and you notice that the price is going up and down, right? It is usually bouncing up from a level. My simplest example that I like to give people, the most simple, right? I ain't gonna say simplest. The most simple example I got is if you throw a ball and it bounces off the floor, hits the ceiling, bounces off the floor, hits the ceiling. Price trajectory. It's not moving naked on the chart. It's usually hitting a level on the top side and bouncing down from that level, or it's bouncing off of a level from the downside, right? And bouncing up. So this is the floor, this is the ceiling. Price likes to get to the ceiling. And if it doesn't break above that ceiling, it will usually go back down. And when it goes back down, if it doesn't go down to support, it'll usually come back up to resistance. Are y'all with me? Are you with me? Let me make sure y'all with me. Let me get a W in the chat if you with me. I need to see W's light the fuck up. Let me see a bunch of W's. Because if you don't understand, I you know, let it be known if you don't understand. Please tell me if you don't get it so I can focus on the topic at hand. Support typically expected that price should rise after touching that. Price should rise after touching support if it doesn't go below support. If it gets to resistance and doesn't break above it like it did here, then it'll usually come back down like it did both times, right here and here. It came back down here, it came back down here because it hit that level that it hit last time. See, right here, boom, it hit this level and came back down. Immediately, you pay attention to this level. Immediately, you pay attention to that level. And you want to mark support, Papa Joe, you want to mark support and resistance on a higher time frame, on a lower time frame as well. On a you want to use top-down analysis. You can mark support and resistance, and I'll show you real quick. Let's go ahead and get to it. Let's use a different stock as an example. Let's use Warner Brothers as an example. Why not? They just did pretty good today. All right, so here we got Warner Brothers. I'm going to actually zoom out to about a year-to-date chart so I can show you guys. And I want to put it on like a 30-minute time frame so we can get more candlesticks. And it's still so much movement that I want more movement than this. Let's use one like QQQ. I ain't going to be petty. I'm going to stop being funny. And I'm going to take away all these extra lines and shit too. Let me get rid of all these drawings. Delete all. Boom. And I'm going to get rid of all the indicators because I only want to show y'all support and resistance right now. So I'm going to get the EMAs off of here as well. Just by clicking on them, you can remove them. All right. So now all we looking at is the price action. And I want to put it on. Matter of fact, this is perfect. This is perfect. All right, so I'll squish the chart, compress it. I want to compress it and make it to where I can see more candlesticks. All right, so look, price came up to this level right here. Price came all the way up to this level. Boom, fit $581. I want to mark this level. I'll mark that. Boom, that is resistance. Price came up to this level and fell down. Now I'm paying attention to this level because if the price comes up here in this area and doesn't go above it, it'll go back down. And it did it again here. It did it again here. But here it broke above it in the same manner that I was just showing y'all. Literally, it looks the same. It's the same as this. It broke above it in the same sense. And yeah, so when it broke above it right here, this is the break and the retest, because sure, it broke above it here. It broke above it here. And it broke above it here, but it didn't close above it until we got to this candlestick. This is a confirmation candle. But then we got the strong ass retest, which is like a bear trap, because this would make people start buying puts right here if they thought that it was continue to go down. But this is only a pullback, and this is a pullback. Is what happens after that is it continues to go up. But it created a new level of resistance. That's what I want y'all to pay attention to. This is the previous level of resistance. As soon as price broke above it, resistance became support. This is now the floor. This is now the floor. And this became the new level of resistance. Okay. And so it was ultimately creating higher lows because the price came down to here. That's one low. And then it went up to here. It came down here, and that's a higher low than it was here. It made another low here, which is lower, but it's still a higher low than the previous swing low. Then we made another. We are ultimately making higher highs on this stock during this time. Because remember, this is QQQ. I can go here to the lines again, and I want to add a extended line this time so I can see if this is in an uptrend by marking the bottom all the way to the top. And now I can see that it is clearly climbing up a hill. It's clearly in an uptrend. It is clearly in an uptrend. Thank you for the gifts, Papa Joe. Now, that it's in an uptrend because it's making higher lows. It's also making higher highs too. It was high here, it's higher here, it's higher there. It's an uptrend. But if you pay attention to the uptrend, I'll also mark the top of the uptrend as well. Now we can get a range going once you get to marking like areas like this. You get a range and you get a good, clear idea of support and resistance and where price is going within that range. The price will stay inside this range for a while. You won't even have to guess where the price is going because more than likely it will literally bounce up and down inside this ray. It'll bounce up and down inside until it doesn't. All of tech is in an uptrend, sure. But at some point in time, it won't be, and you'll be able to spot the trend. You'll be able to spot it whenever the trend reverses. You will be able to catch the move because you're tracking it. If this comes down here to this bottom trend line like it did 1, 2, 3, 4 times before, and doesn't go below the bottom trend line, can y'all tell me what's going to happen after that? Let me see if y'all been paying attention. And if you're not new, no big deal. I'm really speaking to the new people. How do you know where resistance is? It is literally the spot where the price is resisting to go up from. Support is the price that is, it seems like something is supporting it from going down further. Something is resisting it from going up higher. Invisible lines that you got to put there. And you really don't even got to put them there. You can see the shit without the lines. The lines just put them there for those who don't got that third eye open. You know what I'm saying? The price came all the way down, up, down, up, down, up, down. Oh, this is sideways really, but it's hitting this line up here. And it is going up and down, sideways, up, sideways. It is choppy as hell. But it's still going up and down within the range. You do not have to be confused during these consolidation periods During the sideways periods, there is no confusion because it has not broke above the top trend line. It has not broke below the bottom trend line. This is QQQ. This is tracking the technology sector. This literally tracks all of technology in the stock market. Now, if the price comes down to this bottom line, you guys, if it doesn't go below this bottom line, can y'all tell me what's going to happen? I just want to see if y'all been paying attention, or else I feel like I'm just talking just to be talking. I need to know y'all actually getting it. I had a good friend of mine call me a charlatan. I need to make sure I'm not no damn charlatan by making sure y'all actually learning. That's right. That is what it's going to do. That's right. It's going to go back up. It's common sense. It did it before. It's historically speaking. This is QQQ. So now that it's up here and it's trading sideways, it really got more downside to come to. It'll come back down here. It always do, right? Unless it goes and breaks above. If it don't break above, I know that if I do enter a put, to get the fuck out near down here. I know when to enter a put. I'm entering to a put. I'm shorting the shit when it's at the top of the trend line. It's sort of my own, sort of you can use Bollinger Bands to help you do that too, but that's a whole nother story as well. If it goes past support, you sell it and slowly learning. Yes, you are, Gabriel. You a fast learner though. Okay, so y'all get that? I hope y'all get the gist of that. What time frame are you on? This is a 30-minute time frame. Each candlestick represents 30 minutes of time. Notice what happened when this candlestick right here popped up. We got a big reversal. A lot of y'all be wondering, well, how the fuck do I know when to get in a trade? Set your stop loss behind support and set your take profit at support. Can you explain the time frames? Yeah, so you got, so if I go right here, this is a 1-day chart. This is me looking at the price of QQQ in a 1-day time frame. I get to see, let me make this smaller. Hold on. All right. So this is me getting to see the price of QQQ in 1 day. But on Webull, they allow you to separate the night from the day by going right here. Without that, if I press this button right here, it'll take away the color. It'll take away the graph to where you don't know what's nighttime or daytime now unless you just pinpoint the exact time. But if you click that, it'll show you the nighttime. It'll show you the pre-market by color coding it. So everything in the dark area is within the trading day. And everything in the dark blue and light blue areas is the aftermarket and then the pre-market. Okay. So I know that this is pre-market. This is during the day. So I know that during the day, it opened up right here. It came down, shot up, trade sideways, shot up, came down. But we do know that this all happened within one trading day. Okay. So within one trading day, the price went from 584 up to 587. This is your area of support and resistance. This is support and resistance. Let's put it on the horizontal line. This is support down here at the bottom, and then this is resistance. So come Monday, we know that the price needs to break support or resistance. Right now, it's trading within the range. It's in the middle of support and resistance, so I ain't fucking with it because I don't know where it's going to go from here. You don't know if it's going to go up or down. Why don't you wait for it to get to support or resistance? You want to wait for it to get up to resistance and see what it's going to do from here, or down to support and see what it's going to do from here. Does that make sense? Time frame is perspective to what and when you are trading, including your trading strategy. That's right, Ben. 100, no doubt. I don't use indicators unless I am screenshotting it for a trade, says Chad. All right. Let's see what else we got in the comment. JB, thank you for liking the live. You can, but you can have confirmations. Okay, yeah. Anyway, so that's on a 1 day time frame. I can also go to a 5 day, right? I can go to a 5 day time frame. I'm a bad cameraman, right, with my left hand. I got to get a phone mount. So I don't usually turn my camera on. I'm usually just showing screenshots for those who y'all know me. I'm missing a lot of comments too. So the trailing stop trucker dude, you would use that. Oh, I thought I almost got in trouble. You would use a trailing stop when you trade in futures or something like that, but you can manually use a trailing stop. Let me give y'all an example of that too real quick. But yeah, hold on. This is a 5-day time frame. So now it's showing me 5 days of time. Each dark area is trading day. And then you go out to a 1 month chart that's showing me 1 month of time. So basically you just get to see a bigger picture. We was just looking at the corner. We was in a 1 day time frame. It was only showing us this. Literally, it was only showing us this day. The more you zoom out, the more information you got. You get a bigger picture of the trend, a bigger picture of where the price is going. All right. So he asked me about a trailing stop. Let's talk about it. Let's pretend that you get in a trade right here, and I'll make this line blue to symbolize where you're getting in the trade at. All right, let's say you got in the trade right here at this blue line and you bought a call, or you press buy. Let's say you trade in futures and you press buy. Now let's pretend that this red line is your stop loss. Okay, this is your stop loss. Now the price went up immediately. Let's get this on there. You get in this trade. You know that you entered the trade where the blue line is at. Your stop loss is here. The price go up to here. Now you should be taking your stop loss and dragging it up. That way, if the price comes back down, you get out the trade, but you get to keep that much money. Now the price ain't came back down yet, so you need to keep moving your stop loss up to lock in all that money. Now you locked in all this money using that stop loss. It kept going up. You want to keep dragging it up. I keep dragging it up. You'll get stopped out on this candlestick right here. This candlestick came back down and got you out the trade, but you got to lock in all of that money right there. You can do it on the phone, Shine, but it's a lot harder to do on your phone than it is on the PC. Okay, that about wraps it up. I see nobody registered. I don't want you. I don't want y'all to register if y'all don't have time to. But reach out to me on a 1-to-1 basis, on a 1-to-1 level, 1v1, because it's harder for me to teach you all at one time. It's easy. It ain't hard, but I want to come to your level. Right? You may be on a higher level than the rest of the class. I'm doing another crash course Sunday afternoon, Sunday evening. But yeah, if you don't have time for it Sunday evening, go ahead and inbox me. Somebody said you sound like one of my brothers. I am one of your brothers. Somebody said, I appreciate your work, bro. Thank you. And you want to be there, hit the follow button so you don't miss another live. And yes, the link is in my bio. There are several links in my bio. You guys feel free to connect. If you learned anything from the live tonight, I would appreciate it if y'all connect with me so that we can continue this learning. We want to continue the learning. Send me the follow, right? That's all I need from you guys. And we're going to be locked in. Right? Join the community. The link is in the bio. Everything y'all need to know is right in my bio. When y'all hit that link, you're going to find out how to join, how to do anything from there. We can do it from there. But yeah, I'll be live again tomorrow. I hope y'all had a great Friday. Can we hit 18,000 likes? Can we hit 18,000 likes, y'all? All right. So we did, I think, make sure I ain't miss anything. I told you guys about open and it went crazy. We also was talking about it. Usually I go live around this time, 11 o'clock at night to about 4 o'clock in the morning. So the people at 4 a.m., they're going to be looking for me, but I went live kind of early today. I usually go live at night. During the daytimes, I'll try to do 2 a days from now on. It's more than likely going to be 3. I want to do one before the market opens, after the market closes, and then the late night show. But usually it's just the late night show. But yeah, open, you guys, buy the dip. Okay, this is not financial advice. Buy the dip. Every time, first it went from $4.92 and it came up And it hit $5, and I was like, buy the dip, and it went up to $7, and it was like, where the dip at? Said, well, the dip, it came. Hold on, it came. It came right after $7, and then it went up from 5 to 8, and it dipped again, and it went up to 9, and it dipped again, and went up to 10. It's dipping now. How many times is it gonna happen before you pay attention? Now, it is going to be some pullback every time some shit go up some stairs and get exhausted. I told y'all that. But just pay attention. Use price alerts. If y'all don't know about price alerts, those will help you out tremendously because it's going to let you know when the price hits a certain level. I will respond, the chosen one. No worries. So, let me see what else we got. Just be cool. I know how it is for those who waiting on Monday to come around. Go touch Earth. Okay, go touch Earth. That chart is not missing you. The chart is not missing you. I know how y'all is. With that being said, we're going to make sure that it was already 12:36, so it's Saturday where I'm at. We're going to make today twice as good as yesterday and half as good as tomorrow. Okay, I thank y'all. I hope y'all enjoyed the live. I want y'all to enjoy the rest of your night, the rest of your evening, and tomorrow. Make sure that you utilize the day. Make it a great, lucrative day for yourself. Get ready for the rest of the week to come, because we're gonna see a big return on the time that y'all spent and paid. You're gonna see a return on your investment because you stayed here this long and paid attention. I hope you utilize the power of execution and use what you learned. Ask more questions, you guys, next time. Inbox me. Feel free to use me. Use me. Not in a bad way. Don't abuse me. Use me. All right. I'll catch y'all later.